Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, October 11th. Not much on the docket today, so I'll just jump right into it. There are job openings for the month of August. So in July, we had 6.14 million job openings, and it dropped down to 6.08 for the month of August. Last but not least, really, is the FOMC minutes going to be released by 11 o'clock Pacific Standard Time. If there's any curveballs in there, it could throw the market into a little bit of some volatility. But for the most part, they believe they kind of have the pulse on it, so to speak. But they're going to be obviously combing through it to make sure there's no surprises in there. We do have a few Fed speakers also speaking today with comments like Fed member Evans out of Chicago had mentioned that it's not in a conference in Zurich. Doesn't believe that it's imminent that we're going to have a rate hike, but the Fed funds future basically is betting that we will have 90% chance of a rate hike in December. So we have the November meeting, and then after that we have the December meeting, which will be end of the year. And people believe at the December meeting that will be most likely a chance for them to raise rates at that point. Today, headline news, stock market's up. Again, we're getting into the earnings reports. There's a couple out today, but mostly it starts off tomorrow. The earnings reports will begin, and those will be pretty much taking precedence. They feel that they'll get a little bit better gauge of where businesses are at once they review the third quarter earnings reports from the major corporations out there. So that's pretty much about it for the day. Again, it's kind of a quiet day, so to speak. They are feeling optimistic, which is what's kind of helped boosting the market here. And we have been seeing fairly decent economic data, which would not lead us to believe that the economy is on a strong hold here. So let's go and take a look here at the bond market, see what's going on over here. Oops, sorry about that, went a little too far. Yesterday, as we indicated, there would be a market rollover, a bond rollover. So that translates to about 22 basis points. So if you take 22 basis points, it would put us up closer to here, where actually we were at basically zero. So we would be right about here for a market close. So there was no gain or loss yesterday. It was basically at zero yesterday, and actually we would have been right about here. So we would have been right here, 22 basis points. Today we're up about 11 currently about 9 basis points. We were up 11 earlier, but now we're about 9 basis points, still above the 200-day moving average. Not quite for a price change or anything yet. We'll have to kind of wait and see if there's any, again, market liquidity. We're also seeing some the great unwind happening with where the Fed is going to start trying to unload a little bit their the holdings in terms of the assets and treasuries and mortgage-backed securities and such. So they're going to start decreasing their holdings in that, and they're calling that the great unwind. Now, the gentleman out of New York, the Fed, basically had said he doesn't anticipate that disrupting the markets in those markets as a kind of basically the way they're doing it is they're going to stop reinvesting into those. They get the maturity dates, and then typically they would reinvest. So they're going to kind of not reinvest as much, and then probably decrease on the amount that they're purchasing. So we'll have to kind of wait and see. This is the first time this has been done, so we'll have to kind of wait and see how this plays out, if it does disrupt some markets or not. We also got the 10-year Treasury. We're basically at zero right now. There's no change as to where we were yesterday, so pricing is about the same. So we got, as we can see, we're in this range here. We're kind of going the sideways range from just above the 200-day moving average and this first resistance line here. All right, folks, that pretty much wraps it up today. Again, there's no price change for interest rates with the bond rollover. There's even though it shows a big drop, it does not affect pricing whatsoever. It's just that it's kind of resetting itself. But if you guys want to get more updates throughout the day, today could be a good day for that because the FOMC minutes, I will have more information on that once it's released. Come over to Twitter. You can find my handle at Mike Bjork on Twitter, and I'll be posting throughout the day, including the market close and such on Twitter today. You guys have a wonderful day. Thanks so much for watching. We'll look forward to seeing you guys tomorrow. Bye-bye.